Today we are very pleased to have Puan Sharifah, Head of Fixed Income for Amanah Raya Investment Management, to share with us on Amanah Raya Sharia Trust as well as Amanah Raya Trust Fund. First of all, thank you for allowing us to interview you.
Yeah.
Right. Firstly, how would you describe your investment philosophy or style of your funds? Whether you do a bottom-up or top-down approach?
Okay, for our philosophy, basically that we have a combination of both top-down as well as bottom-up.
Right.
So basically also we look at we use the qualitative and quantitative tools.
Right.
We look at technical analysis as well as fundamental analysis. When we say technical analysis, because when it comes to bonds, sometimes you say, well, bonds is really a bit like, quite moderate in terms of volatility.
Yes.
So there's not much of a, opportunity, sometimes people say lah.
Mm-hmm.
But there are instances of which we can actually look at the last level that has been done and all that, and also particularly if, let's say, you are involved into foreign bond, for example,
right.
so of which the volatility is huge, but especially now when
yes.
during this crisis, Eurozone crisis, or which has affected the emerging markets bonds, and as such you have to look at both the currency risk as well as the currency side as
yes.
well as the movement of the price.
Right.
So at the same time the US Treasury side.
Yes.
So this combination of variables will give some kind of determination at your end in terms of the technical analysis part.
I see. Yes. Then what should investors expect when they invest into your fund, or what investors would be suitable for your funds?
What sort of investors?
Yes.
I think we feel that investors are keen on more stable income kind of investment, of which we at our end we have to ensure that there will be stability in terms of return as well as preservation in terms of capital. So I think it's already shown in our performance that it has been quite stable for the past 5 years.
Right, thank you. What sort of return, like or maybe 5% or 6%
yes,
per annum?
Yeah,
would that be?
Yes, that will be the sort of return that we normally will really look at. But sometimes we, like for example, like last year, I guess we have achieved more than that.
Yes.
Yeah.
Okay, thank you. How about your outlook on the market in view of current, as you know, right now we are in a low interest rate environment. You have interest rate cuts everywhere. Right now we seem to be on hold for Malaysia. What's your view on this?
Yeah, that's what we see, that Bank Negara is not going to do anything in terms of interest rates. The reason why I say, even though that globally is actually looking at some kind of slowdown, particularly coming from the Eurozone,
right.
even though the US is tagging along, trying to probably recuperate from the last crisis, but we feel that Bank Negara is still not going to do anything in terms of interest rates. They are not going to hike interest rates, nor will they cut interest rates. So the reason why we feel that Bank Negara is not going to cut interest rates, because of the fact that more on the, largely due to the high consumer debt numbers in Malaysia, of which consumer debt is about 60 to 70% of GDP, so it's quite high. So that's how Bank Negara is supposed to manage that. So another factor that we have to look at also, the fact that there are a lot of foreign funds actually holding our securities in Malaysia, particularly on the Bank Negara bills, on MGSs. So when you see that there was a recent rally, early part of the year, there was a rally in our nation bond market due to the fact that foreign fund inflows into the system. So that more so of the currency play, basically. So taking advantage of the possibility that ringgit is going to appreciate further. Most of these foreign funds, when they come in, they are not hedging their position. So when they're not hedging their position, the possibility that when FX, that means ringgit, dollar ringgit, is actually spike up, that means depreciate against it. So they will definitely be exiting from the country. That is a possibility. We are looking at the numbers of which foreign funds having bonds in Malaysia in the circle of about 37-38%. So that's quite huge. So if there is an exodus of foreign funds from the system, the implication will be there will be a major sell-off in Bank Negara bills and also short-dated MGSs, and that will trickle down to the PDSs and all that now. So what we feel that Bank Negara will do is that they will probably pump in more liquidity in order to make it stable. So in order, probably they will ask banks to actually increase the amount of MGS in their holding, the bank's holding. So and the market will have a knee-jerk reaction, of course. Of course, yield will be a spike up, but we feel that will be an opportunity. So that will be some kind of a strategy that we are.
All right. That's very interesting.
Yeah.
Thank you for sharing.
Yeah.
One more question: is there any specific allocation for your funds, AAA bonds, AA bonds, percentage-wise? Would there be any allocation?
There are some allocations, but we normally look at the average portfolio duration as portfolio rating.
All right.
So long as the portfolio rating having average of AA,
all right,
we are okay with it, and we play around so long as it's actually within that AA bracket. Because the fact that sometimes if you are overweighting so much on some AAA bonds, which of course is having like very low yield at this current moment, but some AAA bonds doesn't really reflect a AAA rating. So we at our end, our fund management side, we have very strong credit analysis, which we look at individual credit and we look at relative value of each credit. So not necessarily AAA will be overly weighted, because we feel sometimes the AAA is not really giving that relative value. We see sometimes the AA having a very moderate, some kind of moderate level of credit, and it has some kind of yield pickup. So that's where we, balancing up the portfolio in order to, especially during this current low interest rate scenario. So we have to be very, very particular in terms of picking stocks, basically.
I think this will be the last question since we are running out of time. So, how about currency exposure? Because I see that your funds, they state that they are able to invest into debt securities which are foreign in nature.
Yeah. Okay. To tell the truth, that we already get that approved quite recently in terms of the ability for us to invest into for this unit trust fund to invest into foreign currency bonds. We are in the midst of doing it because on the back that we have to get approval. Sorry, not get approval. We got to sign some kind of ISDA with the parties in the banks. I mean, the trustee as well as the bank. So we are in the midst of doing that. Okay. But having said that, we have to tell the audience that we have actually managed foreign bond portfolio at our end, although with other funds. And we are doing quite well in that because the opportunity is greater. The thing is that we can look at several variables. I mean, not only the interest rates in the interest rate of the bond, at the same time the asset swap value of it. So we can manage that in terms of currency as well as interest rates. So variables, these variables is important in order for us to manage properly. And most of the bonds are, if let's say we want to enter into foreign bonds, it's going to be hedged. That's the reason why we need to negotiate in terms of the ISDA agreement with the trustee and all that.
So investors who invest, if let's say you were to invest in the foreign bonds, will not be exposed to currency exposure?
No, they will not. It will be fully asset swap, so at least it will be all in ringgit. So even though there will be a slight exposure, but it's going to be very manageable.
With that, I'd like to thank Sharifah on behalf of Phillip Mutual for sharing with us on these funds. Thank you.
Okay, thank you.
Thank you.